Stop what you're doing and look at your hands. If you're holding a silver eagle, a maple leaf, or even a handful of pre-1965 junk silver, you are no longer holding a simple investment. You're holding a target. For decades, the narrative was simple. Silver is the poor man's gold, a quiet hedge against inflation that stays under the radar. But as of January 2026, the radar has been recalibrated, and it is locking onto your safe. The Internal Revenue Service has just weaponized a dormant classification that most investors ignored until it was too late. Under the current tax code, physical silver is not treated like a stock or bond. It is legally classified as a collectible. This isn't just a semantic difference, it is a financial trapdoor. While long-term capital gains on your tech stocks are capped at 20%, the base federal rate for silver is a staggering 28%. But that is only the beginning of the seizure. When you factor in the net investment income tax of 3.8% and the aggressive new state-level mandates, like the one that went into effect in Washington state on January 1st, 2026, the math turns predatory. Washington recently eliminated a 40-year-old tax exemption on precious metals, adding a retail sales tax and a business and occupation tax to every transaction. When you stack these federal and state levies, your effective tax rate on silver gains doesn't just tick up, it explodes toward 50%. This is the 50% IRS seizure. Half of your wealth, gone before you can even exit the trade. The government isn't coming for your coins with a SWAT team. They are coming with a 1099-K. Think back to the $600 reporting rule. It was delayed, debated, and dismissed by the public as a glitch in the system. It wasn't a glitch, it was a dry run. The IRS has spent the last 4 years building the infrastructure to track every digital payment over $600. They have now synchronized this with the One Big Beautiful Bill requirements, creating a dragnet that captures every secondary market sale. If you sell 10 ounces of silver to a local dealer or an online exchange in 2026, the transaction is flagged instantly. The anonymity that made silver attractive has been systematically dismantled. You're now operating in a glass house. The historical context here is chilling. We have seen this playbook before. In 1934, Franklin D. Roosevelt issued Executive Order 6814. Most people remember the gold confiscation, but few talk about the silver nationalization. The government forced every citizen to hand over their silver to the Treasury for 50 cents an ounce. Today, they don't need an executive order to take your metal. They just need to wait for the price to hit $50 or $60 an ounce, as Bank of America has predicted for 2026, and then trigger the 50% cumulative tax seizure. They aren't banning ownership, they are making it mathematically impossible to profit from it. You are being lured into a high-price environment only to have the exit ramp turned into a toll booth that takes half of everything you own. This is the forensic reality of the new silver market. The trap is set, the reporting triggers are live, and the IRS is simply waiting for you to try and take your profits. You have to understand that this isn't IT about the IRS wanting a few extra dollars from your coin collection. That is the cover story. The real agenda is a desperate backroom scramble for what economists call systemic liquidity. We are currently witnessing the greatest divergence in financial history. The gap between the paper price of silver on the COMEX and the actual availability of physical metal in the real world. As of early 2026, while the digital tickers show one price, the physical market is screaming a different story. Major banking institutions are facing a SIB flush, a regulatory nightmare where they are forced to dump assets to lower their systemic risk scores before year-end snapshots. When the banks run out of cash, they don't look for more paper. They look for high-quality collateral. They need assets that are good delivery. And silver has just been moved from a simple industrial commodity to a strategic national security resource under the Defense Production Act. Why does the government need to see every $600 transaction? Because they are tracking the movement of real wealth out of the banking system. Every time you withdraw cash to buy a monster box of silver, you're removing fuel from the fractional reserve engine. In 2023, we saw the collapse of Silicon Valley Bank and Signature Bank, which were triggered by rapid deposit outflows. By 2026, the stakes are infinitely higher. The Federal Reserve has been forced to end quantitative tightening and pivot to QE light because the plumbing of the financial system is seizing up. There is a massive short on physical silver that the big bullion banks like JP Morgan and HSBC have been managing for years, but the math is no longer working. There are now over 370 paper claims for every single physical ounce of silver held in registered vaults. This is a 370-to-1 leverage ratio that is a ticking time bomb. The government's obsession with tracking your silver isn't about tax revenue. It's about preventing a bank run on the physical metal. If the public realizes that the paper silver market is a hollow shell, they will rush to claim the physical metal, and the system will break. By imposing a 50% seizure tax through aggressive reporting, the IRS is creating a massive friction point. They are trying to make it so expensive and so legally dangerous for you to exit the system that you stay trapped in the digital bank accounts they control. They need your capital to stay inside the fence to keep the bank solvent. This is the bridge between the taxman and the central banker. Look at the refineries. In 2026, the cost of silver lease rates, the interest paid to borrow metal, has spiked from 1% to over 100%. This is a clear signal of a systemic shortage. Refineries have stopped buying retail scrap because they are prioritizing sovereign orders and industrial giants in the AI and solar sectors. Your junk silver is being frozen out of the professional market. The government knows that silver is the only escape hatch for the common man. By tracking every penny and taxing half of every gain, they aren't just taking your money. They are removing your ability to leave the burning building. They are ensuring that when the next major bank failure hits, and the data suggests it was a matter of weeks, not months, your wealth is exactly where they can see it, freeze it, and if necessary, bail it in. The trap being set by the IRS is not an isolated event. It is the final perimeter fence for a new kind of financial architecture. As we enter the mid-2026 landscape, the introduction of Form 1099-DA has effectively ended the era of voluntary reporting for digital assets. But the true architecture being built is the central bank digital currency, or CBDC. If you have been paying attention to the Federal Reserve S Project Seizure, or the European Central Bank S finalization of the digital euro rulebook, you know that the endgame is programmable money. When the IRS tracks a $600 silver sale today, they are calibrating the algorithms that will control your ability to spend tomorrow. Imagine a world where your currency has an expiration date, or where your carbon footprint dictates whether you are permitted to purchase more than a few ounces of precious metals. This isn't dystopian fiction. It is the technical reality of a ledger, where the central bank is both the issuer and the auditor of every transaction. The 50% seizure through tax reporting is the mechanism used to force you into this digital cage. By making physical assets like silver legally and financially toxic to hold outside of the system, they are funneling the population toward a tokenized version of wealth. In this near future scenario, you won't own silver. You will own a digital silver token held in a custodial wallet regulated by the Fed. This token will be perfectly liquid, perfectly trackable, and perfectly taxable. The moment the price spikes, the 50% cut is automatically deducted by a smart contract. You never even see the gross profit. The digital prison is built on the premise that anonymity is a bug, not a feature. By 2026, the legislative shift has moved from protecting privacy to criminalizing unhosted wallets. If you hold your wealth in a way that the government cannot see, you are increasingly flagged as a systemic risk. This leads to the ultimate control mechanism, the ability to switch off your purchasing power. If the government determines that the economy is overheating, they don't just raise interest rates, they program your CBDC to lose value if not spent within 30 days. This negative interest rate monetary policy is impossible to enforce in a world of physical cash and silver coins. This is why the 50% seizure of silver gains is so critical. They must de-incentivize the exit ramps. If silver remains a viable way to store value outside the digital ledger, the CBDC fails. The digital prison requires that there be no plan B. They are using the 1099-DA and the aggressive collectible tax rates to ensure that by the time the CBDC is fully live, the average person has already surrendered their physical holdings or has been scared into registering them for future taxation. The psychological analysis of this shift is profound. They are moving us from account-based money to permission-based life. In the old system, if you had the money, you could buy the silver. In the 2026 digital regime, the transaction must be validated against your tax profile. If you haven't paid your 50% seizure on previous gains, your digital wallet simply won't open for a new purchase. You're being pushed into a reality where your wealth is a line of code that can be edited, frozen, or deleted at the whim of a bureaucrat. The IRS isn't just taking half of your silver, they are taking 100% of your autonomy. They are building a world where the only way to survive is to stay inside the digital fence eating the inflation they create and paying the seizures they mandate while your physical silver, the last true threat to their total control, is labeled a high-risk collectible and taxed into oblivion. The walls of the digital prison are closing in, but there's a structural weakness in their architecture that they hope you never discover. While the IRS and the central banks have spent billions building a digital dragnet to capture every wire transfer and every tokenized asset, they have a massive blind spot, the physical off-ledger nature of a silver coin. This is the silver solution. Despite the 50% seizure narrative and the 1099K reporting mandates, physical silver remains one of the only true bearer assets left on the planet. A bearer asset is a piece of property where the person holding it is the legal owner, and no centralized ledger is required to prove its existence. Unlike a stock certificate or a digital wallet, a silver coin doesn't have an IP address. It doesn't send a signal to a server in Virginia when it changes hands. It is silent, it is heavy, and it is invisible to the digital eye. The true escape from the 50% seizure isn't about breaking the law. It's about stepping outside the system of surveillance entirely. When you hold physical silver in your direct possession, not in a pool account, not in a vaulted program, and certainly not in a silver ETF, you are holding an asset that the IRS cannot track through traditional automated means. In the eyes of the digital prison, if they can't see it, they can't seize it. While they are busy monitoring Venmo and PayPal for $600 transactions, the exchange of physical silver for goods and services remains a private, peer-to-peer event. This is why the elite have been quietly accumulating physical junk, silver, the pre-1965 dimes and quarters that are recognizable, divisible, and carry no digital footprint. They know that when the CBDC goes live and the 50% tax gate is locked, those who hold physical metal will be the only ones with a medium of exchange that functions outside the fence. Think about the psychological power of holding a 100-ounce silver bar. It represents hundreds of hours of your life's energy, condensed into a physical form that requires no electricity to exist and no permission to spend. In a world where the government wants to program your money to expire or to be bailed in to save a failing bank, silver is the ultimate no. It is the only asset that allows you to be your own central bank. History proves that whenever a regime attempts to seize 50% of the wealth through debasement or taxation, a black market for real money emerges. We saw it in the Weimar Republic, we saw it in Zimbabwe, and we are seeing the foundations of it today. Silver is the currency of the free person. It is the silver bullet that shatters the digital cage. The emotional conclusion is simple but heavy. You have a choice to make before the final reporting triggers of 2026 are fully engaged. You can stay in the digital system, watch your silver gains be devoured by a 50% seizure, and wait for your CBDC wallet to be verified by a bureaucrat every time you want to buy bread. Or you can take your wealth across the border of the digital prison. You can convert your fragile, trackable paper gains into the cold, hard reality of physical silver. By doing so, you aren't just buying a metal, you're buying your future autonomy. You are ensuring that no matter what the IRS mandates or what the Fed programs, you have the means to protect your family, trade with your neighbors, and survive the collapse of the digital regime. The IRS cannot track what you hold in your own hands. The exit is right in front of you. It is made of silver, and it is time to walk through it.